How to get a mortgage. One of the most important questions I receive is, you guessed it, how do I get a mortgage? This question may seem simple, but it's a topic that everyone can benefit from education on and can be the key to realizing the dream of home ownership. First and foremost, you need to find a lender that you can connect with, that you feel comfortable sharing your story with, and that will listen to you, your hopes, your dreams, your income, your expenses, your target payment range, etc. So let's say maybe you're 12 months out, you're a whole year out from thinking that you're going to be ready to buy a house. Call the lender today, because there are so many things that the lender can do to help you get ready for when you really are ready a year from now. And let me tell you, timelines change. Maybe you're thinking that it's a year, but after talking with a lender, maybe you'll be ready sooner for whatever reason. Maybe you're not as far off as you think you might be. So talking with the lender is the key to not only helping you with your timing, but to be sure you're doing the things that need to be done to get ready when the time is right and you're ready to pull the trigger and buy that house. After you've had a conversation with a lender, or maybe a few lenders, and you've kind of walked through and you've determined, yep, this is the lender that I want to use. At that point, the lender will talk with you about how to complete your mortgage loan application. Once you've completed your mortgage application, the lender is going to ask you to upload or provide your documentation. First, before I tell you what you're going to need, make sure that you are not just emailing this documentation, because when you email documentation, it is not secured, and we don't want bad guys getting it. Most lenders have a portal that's secure where you can upload the documentation. If you can't access the portal, or you're not comfortable doing it, or maybe the lender you're working with doesn't have a secured portal, then you're going to want to be sure that you're being thoughtful about how to get your private information to the lender in a secured format. Now, what are they going to need? They're going to want pay stubs, 30 days of pay stubs, your last 2 years of your W-2s. Depending on the home loan that you're applying for, they may want your last year or two of your federal tax returns. If you're self-employed, they're going to want more documentation, so be sure to get that list up front. And then they're going to want your assets. They're going to want to know where your down payment's coming from, where your closing costs are coming from. If you're getting a gift, who is that coming from? All of this documentation is going to put you in a position to know that you're going to be pre-approved for that mortgage. Now, without it, a lender doesn't have everything that they're going to need to actually approve the loan. So this is vital. And I know a lot of people are like, well, this lender didn't ask me for that documentation. Well, guess what? At some point, they're going to need the documentation. So it's just best practice to get it all to the lender upfront so they can go through it and ensure that you're going to get that mortgage. Now, there's two steps in this mortgage pre-approval process. There's actually a pre-qualification, which is kind of like a downgraded version of a pre-approval. The pre-qualification could be where the lender has asked you for some documentation, they've reviewed everything, maybe they've sent your file through an automated underwriting system, and they're saying, hey, congratulations, you're pre-qualified for this home loan. I like to take it a next step, and I encourage you to work with a lender that's going to take it to the next level, which is a true pre-approval. And with a pre-approval, you're doing all the same stuff, completing that mortgage application, the lender's pulling your credit, you're providing the documentation needed. But now that loan officer, that lender is going to submit your loan file to the human underwriter. The underwriter is the person in the home loan process that actually signs their name and says that your loan is approved. This is key because in mortgage lending, that step doesn't usually happen until you're already under contract. We like to get it done upfront prior to even getting in that car and going out with your real estate agent and shopping for a house, because we want to ensure that you are secure, that you know you're getting a mortgage, and that you are ready to rock and roll when you find that perfect house. Now, you may be wondering if there are upfront costs to apply for a mortgage. It depends on the lender. That's the truth. Now, some lenders will charge an application fee, some lenders will charge for your credit report fee, and some lenders don't charge those items until the close of escrow. Now, there are two mortgage misconceptions or myths out there, and one of which is that you have to have 20% down to be able to buy a house. In fact, I just was talking with one of my good friends, and her son is getting ready to buy a house, and somebody told him he has to have 20% to put down. No, that's not the case. There are many low down payment options available. It depends on the loan type, credit score, debt to income ratio, all those fun things, but there are lower down payment options available in this country today. On a conventional home loan, you can put as low as 3% down. On an FHA loan, that's 3.5% down. On a VA loan, there's actually a no money down program if you're eligible for a VA home loan. So as you can see, there are a lot of options out there that allow for a down payment less than 20%. When we talk down payment, a lot of people think that that money has to be their own money, but it doesn't always have to be. A gift from a relative or a parent in most home loans is allowed. And we do see a lot of that today. So maybe you're in a position where you have some money and a grandparent or a parent is in a position to be able to help you with the additional down payment and or closing cost credit. That's okay. Just be sure to talk to your lender and let them know that you will be relying on a gift for down payment and or closing costs so they can note it in your loan file and make sure that they get the documentation needed to close that home loan correctly. The second mortgage misconception is credit score. A lot of people think that you have to have a 720 or higher credit score to be able to get a home loan, and that's not necessarily the case. The mortgage program that you're applying for is going to dictate the minimum credit score threshold. And many of these programs will allow for a credit score as low as, let's say, 620. That's very common in our country today. So don't get wigged out thinking maybe you're at a 680 or a 690 and you have to wait and you got to get that credit score up to be able to apply. This is why it's so important to talk with an educated lender and let them get their hands on your credit report and then start to coach you through. Are you in a position today with down payment and credit, your income, your assets, etc.? That's everything that they're going to do to pull it all together and be able to give you clear guidance on the mortgage you can qualify for today. The mortgage pre-approval process can take a day, a couple of days, or maybe even a week. It's really going to be dependent on how long it takes you to get the documentation over to the lender together with your mortgage application. The lender's going to pull credit, they're going to look at everything, and they're going to be able to then come back to you and tell you the amount or the type of mortgage you can qualify for and the amount of that mortgage pre-approval. Now, once you are pre-approved, you're going to get your pre-approval letter and you can go out and start shopping. A lot of people ask, okay, I find my house, how long is it going to take for the mortgage to close? A typical closing time frame is 30 days. But that can vary widely based on the state or the area that you're purchasing the home in. So some areas, a typical turn time might be 45 days to close, or even 60 on the East Coast in some of those communities. So again, talking with your lender and your real estate agent, they're going to give you guidance on the closing time frame once you've identified the house and you're under contract. Now, we haven't talked about the real estate agent yet, and I will tell you, having a real estate agent that gets you and has experience in the area that you want to purchase your home in, it's going to make all the difference in the world, partnered with a great lender that's already worked you through this pre-approval process. So find that real estate agent, talk to them, go through the same process, meet them face to face. You're going to be in the car with them a lot. So be sure you like them, be sure you trust them, be sure that you are confident that they're going to be able to help you find that home that you want to purchase. I'm sharing this with you because I believe in home ownership. I talk to so many people that truly do want to buy a house and they just don't know where to start. My goal is to provide you with this important information, back to the basics education, and a jumping off point for you to confidently move forward with the process of getting a mortgage. If you're wondering all of the things that's going to go into the equation of your mortgage pre-approval, know that the lender's going to be looking at your credit profile, your credit score, your job stability, continuance of the income that they are using to pre-approve you, and they're going to focus on your debt-to-income ratio. For more information and a deep dive into what the heck a debt-to-income ratio is, click here to watch my video all about debt-to-income ratios.